So, hi everybody, and welcome back to another video about crypto taxes US. This year with our last minute quiz, Christmas special. Ask me anything, especially about the new tax form 1099-DA and what to do right before and after New Year's Eve 2025. My guests today are again Clinton and Ben from CryptoTaxAudit. Guys, nice to have you here. How is it hanging?
Oh, it's great. It's great to be on the call, Moritz. I'm the founder of CryptoTaxAudit, and Ben is our director of crypto analytics. There are some really urgent things that all your viewers should know about crypto taxes. Radical changes are happening, and we want to talk about what needs to be done here in these last few days of 2024, and then how CoinTracking.info is helping people to equip and address those issues next year. Uh, the big
Thank you, Clinton.
change is IRS has come out with new regulations that reverse and contradict the guidance that they had given us all the way back in 2019. Without getting deep into the details, it has to do with how we determine the cost basis of a coin that is sold. There are two dimensions of that. One is it HIFO, FIFO, LIFO, which I assume your viewers understand the selection process. But secondly, is it a buy account or is it a universal wallet? And there's some different terms for this approach. A universal wallet is where all wallets are treated like one, and a buy account method is that is to say, if I sell an ETH that's on Coinbase, I have to find an ETH that's on Coinbase to consider as the one sold. Whereas the old method, the universal or multi-depot or the single depot method, allows you to basically choose from any coin that you have. Now, what's really radical about this is that these rules are retroactively applied. This is big. This means that you did your own job. You used CoinTracking.info. You picked one of the basis tracking selections, and you reported your gain. You did everything well. You did everything to the best of your ability. But now the law has changed retroactively. Those calculations will be wrong because FIFO by wallet approach was not the standard default that most people chose. Even if you used other exchanges or services besides CoinTracking.info, all right, they're going to be wrong. Good news is the IRS has made available a revenue procedure that allows you to lock in the old gain calculations and start off 2025 with a brand new baseline and avoid this retroactive calculation. Simple process to do. It's actually quite complex, but for this year, we made it very simple. You need to go to cryptotaxaudit.com/1099 and sign up for the Safe Harbor Allocation Plan. It's totally free. It's It's an e-signature document. You get a copy. We retain a copy. IRS gets nothing. And you basically, the law this revenue procedure requires you to adopt this plan by the end of this year, which is what the e-signature process does. The second step you have to do is take a inventory with screenshots, documented inventory of your holdings at the end of the year. You do those two things, and you're well positioned you can protect yourself. If you don't do these things, then you're exposed on those old calculations because of the retroactivity. And there is additional steps you have to do next year. We'll tell you about those next year, but CoinTracking.info is going to have a link that they're going to post for the steps that you'll need to do next year to take advantage of the tools, special tools that Moritz and his team are preparing to help you handle this revenue procedure and make sure that you don't pay any more taxes than you have to and that you can avoid trouble with the IRS.
Thank you, Clinton. I want to summarize that a little bit in short. First of all, we have a new calculation or gain calculation method beginning next year. We have the possibility to switch our previous calculation to this new calculation method if we do our steps right, if we do everything right just before the year ends. So this is like a wake-up call right at the end, but don't worry, there's still steps that can be taken to avoid penalties, miscalculations, or problems with the IRS. Also after 1st of January, and this rules can apply retroactive by January 1st, 2024, or what date are we talking about?
You have to do the new rules apply starting January 1st. So what we're
2024 or
trying to
2025?
of 25, the new rules, but they start applying then. But if you get audited on prior years, they will use those rules on you in the prior time period.
So you okay, that is a very nice
So the taxpayer, your clients, what they should do this year is, of course, sign the allocation plan on cryptotaxaudit.com/1099, do the physical inventory, and then next year, before they file their taxes, they would use CoinTracking.info the same way they've used it in prior years. You're not having to change anything because your 2024 is under the old guidance, and just do it as regular. But then once you've done that, and you figured out what you're reporting for 2024, then we have to map the the cost basis of the unsold coins according to coin tracking. You have to map that to the physical inventory of coins that you captured here at the end of the year. This will result in kind of a one-to-one correspondence, and it won't be simple, but we have been working very closely with CoinTracking.info to develop as easy a use tool to make that process new. And then when we do the gain calculation in 2026 for the 2025 tax year, it will be under the new rules. We'll be using the allocation mapping that CoinTracking Info has provided tools that's going to help make that easy. And you'll be able to start off 2025 with a new baseline that you don't have to worry about all the old missing data and stuff like that.
Okay, thank you very much. Can you maybe give us the essentials about this physical inventory? What do we face here? What do we have to do?
Yep. So to do the physical inventory, you're actually looking at all your wallets and accounts on December 31st and noting down how much of each token you have in each wallet or account. So this is like if you go into your Coinbase account, this is like looking at your portfolio view, and it shows you have 1 Bitcoin, 10 Ethereum, 1,000 Link tokens, and that's what you're gonna do for each wallet. Now, for the wallets, there's really like two ways you can take the snapshot there. You can go directly log into your wallet application. If it's on a ledger, log into your ledger, take that snapshot. You want to try and capture a wallet address in there if you can, if it's a partial wallet address. If you can't capture the wallet address in the snapshot, try and take detailed notes and maybe put down in a document that explains all of the snapshots. And you also want to get a timestamp in there as well to show the date and timestamp on December 31st, 2024.
Thank you very much. And
And
this is the result have to be submitted via this Form 1099-DA, right?
No, there'll be two different things. So what is the 1099-DA form? This is the new form that the IRS regulations are requiring crypto brokers and exchanges to report to the IRS the trading activity of U.S. citizens. This applies only to U.S. citizens. So what that will mean, the first 1099-DA, DA standing for digital assets, will be issued in January of 2026. And it will report all the sales and transfers that occurred in 2025. Okay, so you will be getting those from all your U.S. exchanges, Kraken, Gemini, Coinbase, Uphold. They will all be issuing those. And we'll have to reconcile that, and we'll be working closely with CoinTracking.info to develop a process for reconciling those reported transactions against the transactions that aren't reported that we know about from your activity using CoinTracking.info.
Okay, thank you very much, Clinton, for clarifying that. Talking about this form and also this cost calculation, both. So far as I understand it, we only have some differences in the calculation of
My
our
words just look a little
gains.
stiff.
I'm sorry, it can sometimes happen.
Okay.
Yes, I'm sorry for that. Okay. What I was wondering is whether other forms of income in crypto and my behavior on custodial and non-custodial wallets will be affected by any of those changes. For example, is our staking rewards, airdrops anywhere mentioned in this new regulations? Is the difference between custodial and non-custodial wallets, or is are the tax rulings quite the same? The only difference is that the gain calculation is a different one.
Well, those are great questions. As far as the safe harbor allocation process, we recommend documenting everything, and we'll tease out those details next year. As far as the 1099 DA report, and most U.S. taxpayers are very familiar with the 1099s. This is just another one. It's a DA, and it'll summarize on one document all the trades you did. It will also list pure income transactions such as staking rewards received if they occurred off an exchange. So like if Kraken, you staked on Kraken, Kraken's going to report that. If you staked on a non-US staking platform, then there's no reporting of that on a 1099 DA form. So what's going to happen is some of your trading activity is reported to the IRS through these 1099 DAs, but not all of it. And so the process in 2026 will have to work with CoinTracking to reconcile those two, to not duplicately count those reportings.
Okay, thank you very much. Will be any long or short-term gain calculations be affected by this? With
Those rules all stay the same.
Okay, perfect. So we have some to summarize everything, we have some new rulings, we have some new forms we have to fill out, but basically our basic tax understanding of cryptocurrencies remains the same. Is that correct?
Yes.
But from a practical standpoint, there will be way more transparency in the future. There will be way bigger or advanced documentary requirements, and that's where you guys come in and can help the people for free.
Exactly. So just to summarize, you got to sign up today at CryptoTaxAudit.com 1099. Sign up for the safe harbor plan. It's totally safe. There's no downside. Don't doubt it. Don't hesitate it. Then you need to document your whole holdings here at the end of the year with screenshots with timestamps on them. Document everything. It's better safe than sorry. I can't underscore the importance of that. And I can say that CoinTracking.info, from our perception, has been the leader in taking and implementing tools that'd be necessary for us as taxpayers to accommodate the new way of reporting. So I'm very excited to be working with them.
Yeah, thank you very much, Clinton. We are also very excited working with you all the time. Your whole team, everybody is so helpful. We thank you for that dearly. Just to have one last question, when do we have to file everything and prepare everything? When is the deadline for that?
Well, of course, the safe harbor plan this year, you got to sign up by the 31st. Next year, your tax calculation, it's business as usual. Use CoinTracking.info the same way you always have to calculate your income for 2024. Report that. No other rules have changed for reporting 24. Then we have the rest of next year to do the mapping, to basically define the new baseline for all your assets and the cost basis of them for beginning of 2025. We have really until sometime into 2026 to work out those details. So nobody panic. Just sign the plan, document your inventory, and everything will be fine.
And what happens if I miss this deadline?
Well, if you've missed the deadline, let's say you're seeing this on the, a couple days afterwards, still go sign a plan, still take an inventory. We can, if you're audited, go back and make an argument that you did the best you could. It was pretty accurate. It didn't meet the exact date, but we're close enough. This carries weight. But you really, really do want to be able to figure out what you owned at the end of the year. And if you, let's say you did this like the 15th of January, we might be able to work back into what your holdings were by looking at your transactions. So yes, but even after this year, sign up for the safe harbor plan. There's no downside.
Okay, Clinton, thank you very much. I think we've got everything we need so far, especially since there's a little bit of time pressure. We should keep this short for everybody. Thank you, Clinton. I want to remind everybody to check out the link cryptotaxaudit.info, right?
.com
Dot,
slash
dot com.
1099.
/1099. There's everything more in detail, the step-by-step solution, and Clinton and the team will be helping you the best they can. If you have any further questions, hit the comment sections. The guys will look into it and answer all the questions, as well as our team. So this has been great, guys. Thank you very much. I still wish you a Merry Christmas and Happy New Year.